We are frequently asked by international sellers what type of entity they should file to be and what that process looks like.
Please note, we do not offer legal advice, nor do we serve as a registered agent to file for a business entity, but we will provide counsel from a tax perspective regarding your U.S. entity. There are various pros and cons with each entity type.
Your first option is a limited liability company, also referred to as an LLC. An LLC can have one or more members. As a sole member or multi-member LLC, all members will need to apply for an individual taxpayer identification number known as an ITIN. There are specific document requirements when applying for an ITIN. Most sellers find it easiest to supply a certified copy of their passport. It is important to know this certified copy must come from the issuing body. You can also supply your original passport, however, we do not recommend this. If you are a multi-member LLC, you will also need to file for a federal employer identification number known as an FEIN. This process is much simpler and you can get started by clicking the link below.
Once your LLC is set up and you begin selling, make sure to track your sales and expenses generated during the calendar year. Your income less your expenses is then reported on Form 1040-NR for a sole member LLC and a 1065 for a multi-member LLC. If you are a multi-member LLC, each owner may have to file a 1040-NR in addition to the 1065. You will individually pay taxes at the applicable individual tax rate. The tax treatment of the business income is based upon the tax treaty between the United States and your country of residence.
Another option is a C corporation. As a C corporation, you will need to apply for an FEIN. To apply for an FEIN, please select the link below. You will still need to track all revenue and expenses generated throughout the year. From there, the resulting net income is reported on Form 1120 to the Internal Revenue Service.
Your U.S. C corporations will pay taxes at the applicable corporate tax rate. Today's rate is 21%. As a C corporation, it is important to know if you want to distribute money from the company to an owner, you must do so through payroll and/or dividends. The tax treaty between the U.S. and your country of residence will determine how that salary and/or dividend is treated for tax purposes.
Note, if you pay yourself a salary, you will need an ITIN and will need to file a 1040-NR tax return.
There also may be additional state requirements for both LLCs and C corporations. Click the link below to download a checklist explaining the process for each entity type, the order in which you should proceed, and the corresponding website or agency you will work with to complete the task.
Also, some situations may change our advice. If you need additional information, please contact us to set up an appointment.